time around, we have seen a marginal uptick on a month-on-month basis, but the volatility definitely has been very inherent, with the flows taking a bit of a hit. Let's get in Nilesh Shah to chat a little bit more about them. Nilesh, hi there. Good afternoon. How are you looking at the overall picture of the data that we have from AMFI that has kicked in? It suggests that this time around we have seen the overall equity inflow picture come in at about 0.2 lakh crores lower.
So one, there has been a slowdown in mutual fund flows. The slowdown is more driven by drop in balanced fund, where we have seen about 1,000 odd crore of redemption. And that has impacted overall flows coming down to about 9,279 crore. This is also the first month probably where ETF flows have jumped up substantially ahead of the broad equity fund flows. It shows the power of provident fund, pension fund investing into equity market. The good part is that the SIP numbers have remained steady. It's still above 8,000 crore. And while there has been cases of closure of SIPs, it has remained within reasonable range. So overall, it's a subdued month for mutual fund flows, but there are silver lining in terms of continuity of SIPs and ETF flows picking up.
Take for flows to come back, because like you were mentioning earlier, that it's actually balanced fund as a category which has seen outflows. Now this is a little alarming, because if you look at traditional investors, the balanced fund category is supposed to be most conservative of the lot, instead of taking concentrated bets across market cap categories.
Your point is absolutely valid, but I think in balanced fund, a lot of investors probably came in with assured or continuity of dividend in mind. And as the equity markets turn volatile, that ability to declare regular dividend came under pressure. So there is probably a mismatch between investors' expectation and the performance, which is resulting into this redemption.
Fair point. Nilesh, I mean, I know these are uncertain times. You've got that big overhang in terms of elections as well. But the fact of the matter is that the market has made its fair share of attempt to try and claw back. I mean, I know it's only 6-7 names, but nonetheless, they've taken us back to those 11,000 levels. Would you say that you would have a clearer picture and net inflows actually come in only once the elections are over? Or would you say this is just a temporary phenomenon, an aberration that one has seen, although it's lasted us 4 months now?
So there is two sets of investors. One is smart money, other is money which is not so matured. The smart money invariably moves in anticipation of an event. We saw that in September 2013 period also, where smart money moved in anticipation of a stable government, and markets started continuously rising from 18,000 Sensex onwards. There is also a set of money which is not so smart, which has not seen prior experience of volatility. And they wait for certainty to happen and then invest. Now, in that scenario, you have certainty, but your returns will come down, because market would have priced that certainty. So our feeling is that we will see probably some amount of increase in mutual fund flows on equity side from here till election, as some smart money might be willing to take a call on the shape of the government. But the large flows probably will come post-election once they see certainty of the government.
Yeah. Fair point. Also, Nilesh, you know, the liquid and the income category, as I'm scanning through the data, has also seen an outflow. Is the market somewhere also spooked or rather afraid that a case like Island FS may happen again?
No, I don't think so. And number one, I have a self-interest in this, so please discount me to that extent. But I don't think so in any of the liquid fund investors have worry about the credit quality of the portfolio. There has been a substantial reduction in NBFC exposures. There has been substantial reductions in lower rated exposure. In our opinion, this phenomenon which we are seeing is function of tight liquidity in the market. There were a deposit of about 75,000 crore plus lying in the banking system for CAMFA funds. And under the orders of the court, that money has moved from bank accounts into government account, which has created a substantial shortage of liquidity in banking system. And as overall systematic liquidity came down, the corporates have redeemed. Normally, we see buildup of money in liquid funds and cash funds towards advanced tax outflows on 15th of March. So we start seeing gradual buildup of liquidity from 15th Feb all the way up to 15th March. And then on 15th March, one single shot, there is exodus. But this time we are seeing redemptions because of the overall shortage of liquidity. I will urge you not to link it with the credit quality of the portfolios. Please look at the portfolios to convince yourself it is one of the top highest rated credits.
Right, let you go on that note, Nilesh. Many thanks for joining in with a sense of the AMFI data that has kicked in. As we take a break, the Jan Nivesh Brigade has reached Pune